Good morning. Welcome to NASDAQ Trade Talk. I'm your host, Jill Malandrino, Global Markets Reporter at NASDAQ. Joining me at MarketSite is JJ Kinahan. He's the Chief Market Strategist over at TD Ameritrade. Long time no see.
Yeah, it's been at least 48 hours.
We'll
Jill,
just call
how
it
are
JJ
you?
and Jill show.
You got it.
I like that. All right, let's take a look at the April IMX, down for the fourth month to 4.79. What's that telling you?
What it tells me is that although people may want to buy stocks, they're being much more selective. They're buying some of the lower beta stocks overall. And I really think that it's a little bit of a quandary for everybody. We're beating earnings, and yet the market isn't necessarily reacting. Now, it did Friday, and it is today as we're speaking, but sort of a delayed reaction. So I think people are being much more selective. Last year, it was one of those things where we saw the IMX go up every single month, and now we're seeing 4 months in a row where people are like, I'm just not sure I want to be this exposed. I think we're getting to a point where you start to see a little bit of an equilibrium as people get comfortable with the holdings they have.
I think it's earnings that's throwing everyone off because the actions have been actually the opposite of what you would expect, with earnings beats then selling off and vice versa. But net buyers for this month, it was interesting, were actually volatile names.
Yeah, Netflix is one. I don't know if we would call that necessarily a volatile name anymore. You have Amazon. What I would say is the FANG stocks overall, now we'll talk about Facebook in a moment, being a little bit of the exception, but that still attracts people. And the one that was really interesting, a name that you don't consider to be volatile, but certainly was last month, was AT&T. After that big fall, people really came in to buy that. And it's attractive, I think, for a couple of reasons. Number one, that the fact that the 10-year yield still has trouble getting over 3%, and so with that, people see a nice yield. And besides that, maybe they feel, I think, that AT&T can still do very well overall compared to many of its competitors, especially as we see some takeover talk, et cetera, in that space. Maybe they're buying Netflix, AT&T to deliver Netflix.
Well, let's talk about some of the net sellers. You had energy stocks being sold to all-time highs. That makes sense.
It makes sense, and it also, I think, a little bit of a comment on people's apprehension about the $70 level on crude oil. We've been flirting with it quite a bit, and I think that people are like, listen, many, the BPs of the world, et cetera, setting yearly highs, and with that, and rigs rallying 52-week high. So people are like, all right, does it get better, so to speak, for the energy space? At least let's take off some of my exposure right up there.
All right, last week at the Options Industry Conference, the general theme was that volatility is here to stay for 2018. Would you agree with that?
I think volatility will be better, certainly, than it was in 2017. I don't know if we're going to see 20 and above, but I certainly think that the 15 to 20 range, we are going to say primarily throughout that range, at least for the next few months.
Well, it allows for a tradable market, which is a good thing, and it also allows longer-term investors to pick and choose better entry points. So I think it's a win-win if you look at it from that perspective.
It absolutely is. Believe me, I'm not talking it down. As an options trader myself, volatility is a nice thing from that point of view. I think the other thing that people have to keep in mind is that a 15 or a 20, particularly 20 volatility, when you're trading at the levels we're trading at now, it seems scarier than it actually is, but the math adds up that there's going to be $250 point moves in the Dow or 50 point moves in the NASDAQ every single day if we get to that level. So I just think one of the things people have to keep in mind is that the higher volatility goes in these types of markets with these big levels, it's going to make for some big swings. So the one thing I would say to the retail investors watching is, as we get more volatility, really think about where you put in your stop orders if you're using them, or your sell points, because you're going to have to widen those levels out to not screw yourself mathematically.
All right. Well, thank you very much for joining us at MarketSite.
Always a pleasure,
All right,
Jill.
traders,
Thanks.
thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at NASDAQ.